Let me now bring on board Mr. Ranjan Dhawan, Executive Director of BOB, which is Bank of Baroda. Mr. Dhawan, good morning and thank you for joining us. Everyone on D Street is of the view that structurally all the problems for banks are over. Is that hope, hype, or there is some grain of truth in that?
I have been watching these comments for a fairly long time, and it appears to me that the street moves either between despair or euphoria. The truth lies somewhere in between. I do believe that we have seen a bottoming out of the NPAs in the system, but it's not as if no further NPAs will occur in the system. I think the NPAs as a percentage to gross advances for the system as a whole may have bottomed out or are very near bottoming out. As far as Bank of Baroda is concerned, we did give a guidance some time back after the third quarter results that we see that the worst is over, and the preliminary results that are coming out indicate some room for optimism. We'll have to wait, of course, for the final results, but I do believe, yes, that the worst in NPAs are over, but going forward, I don't believe there is cause for a great deal of euphoria. Yes, true, we will see a slow improvement in margins. We'll see better growth this year than we have seen next year. And that is, we can put down to the macroeconomic fundamentals. I think last year we saw sub 5% growth. This year's growth is being pegged at between 5 and 6%. So that's not a great deal of improvement, but improvement nevertheless. So I do expect some going forward, a slow and steady improvement in the macroeconomic fundamentals and also in the banking fundamentals.
Tata Chemicals, Tata Communications, both those stocks are breaking out in trade right now. Good amount of volume bump up as well. Tata Chem up 1.5%. Tata Communications as well is holding up in trade. But Mr. Dhawan, what is your take on the system liquidity right now, and how do you see the RBI managing liquidity?
Liquidity, there is no shortage of liquidity. This is in any case now the slack season has started. There is not a lot of demand offtake from credit. Going forward, I think liquidity will not be much of a problem. Yes, the government is coming out with the successive bond issues, which will drain liquidity out of the market. But a lot of foreign money is coming into the country. Deposit growth is there. Going forward, I don't see any problem regarding liquidity.
Mr. Dhawan, the general opinion is that the worst of the economic print is behind us. Economy will bounce back, inflation has topped out, earnings will revive. So if the underlying thought is bullish, what explains the surge in the 10-year paper? The 10-year paper is almost at 9%, and last time when the 10-year paper went to 9% was in August 2013, when there was a virtual chaos and the bloodbath in the currency market.
The surge in the 10-year paper could be due to, short-term local factors. For instance, there was a squeezing of the overnight money market, and the Reserve Bank of India wants to develop the term money market, which is to say the 14-day market. So at the shorter end, there was a squeezing of liquidity, and so banks are getting used to a new environment where they will have to plan their day-to-day liquidity in a better manner. And probably their overnight funds will become a little more expensive. So I believe this is a short-term rally and it will peter out.
The fact that 10-year paper is almost at a 4-month high, for the quarter gone by, do you think the treasury side of BOB would have taken a big hit?
No, as far as BOB is concerned, we would not have taken a very big hit, because we have been buying at the higher levels, so our yield for the available for sale portfolio is fairly high. So we will not take a significant hit.
What should we expect from your Q4 numbers? I'm asking you for a forward-looking comment here, but you would appreciate my curiosity.
No, I think that the phenomena that we are witnessing in the market is of short-term duration. It appears to us that the Reserve Bank of India is firmly focused on fighting inflation, and to some extent they have succeeded in their efforts. Inflation is coming down. I do believe that going forward in 14 and 15, there will be a gradual lessening of the inflationary impact in the economy. If that were to occur, I would imagine that the yields would further come down. But there are always jokers in the pack, and I believe that the major joker in the pack is the monsoon. Let us see how the monsoon, there has been a great deal of media speculation as to the El Nino, the so-called El Nino effect. Let us see what happens, but there is no doubt in my mind that the Reserve Bank of India is firmly targeting inflation. So I believe it will have some effect going forward.
What is it that you're witnessing in terms of credit demand right now from corporates, Mr. Mundra? And what sort of credit growth can we, Mr. Dhawan, I beg your pardon, and what sort of credit growth can we expect in FY15?
Credit demand has been muted. In 13-14, credit demand was fairly muted, and we mostly saw an expansion in our books of retail credit. We saw expansion in SME credit. Corporate demand has been muted. Going forward, we still see corporate demand as being muted, but there would be a very slow and gradual pickup. As the year progresses, there would be a slow and gradual pickup in credit.
So if I just read in between lines, the fact that you believe that NPA cycle will not recover very quickly, corporate demand is muted, restructuring is still a big issue, it appears to me that you will not give me good news with your Q4 numbers.
No, I never said that. I never said that. I would not, since we are a listed bank, I would not like to publicly, discuss our Q4 numbers, but I would draw your attention to the guidance we gave at the time of our Q3 numbers, and that was that we do expect going forward some kind of an improvement, and I believe that will occur.